Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about Warren Buffett's most recent changes to his portfolio and how he's been trimming his Apple position pretty substantially in the past year. Now, originally I did have a different video planned for this week, but the news just came out pretty recently and I wanted to cover it as soon as possible. If you do enjoy this type of content, I would appreciate if you consider subscribing to the channel. I'm on my way to 2K and it would help me out a ton. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, with that being said, let's take a look at my portfolio dashboard. So right now I have $29,382 invested and my total portfolio value is sitting at $40,000. Now my total return is still sitting pretty at 36%, but if you guys have been keeping up with the stock market, you would have seen a big downturn that we did see on both Thursday and especially Friday. Because of that, after market close on Friday, I am down 1.47% for the day, which is about $600 in my portfolio value. Right now, my cash position sits at about $6,540, and I do have the monthly goal of adding in $1,000 into my portfolio each month, or $12,000 across the year. So at the end of July, I did add another $1,000 into my portfolio, and hopefully I'll have some opportunities to invest in the market pretty soon, especially if this decline continues. We'll have some pretty good sales available. My total holdings sit at 24 unique holdings, and for the most part, they are dividend-paying holdings, but I do have some non-dividend payers such as Amazon and PayPal. My portfolio yield on average is about 1.8%, and my yield on cost is at 2.45%. Now, before we get into the video, I thought it'd be fun to take a look at Intel after its abysmal earnings report. And so as you can see right here, it is one of my positions, making up only about 0.3% of my portfolio. So it's a pretty insignificant position, but I currently hold 6 shares at about $131 for the total position. Now, originally, I did purchase a very small position in this company as a turnaround play, so I am expecting to have to play the long game in order to get my returns from Intel Corporation. But after these latest rounds of earnings calls, I am going to have to reassess my position and see if it's what I want to be holding long term, even though it is such a small position of mine. For the time being, I will continue holding this position until I have the time to get around to doing a deep dive into Intel once again, but if anything changes, I will let you guys know. Taking a look at Intel after its performance on Friday, we can see that it's down 26%. It was down nearly 30% during the day with a low of $20.42. Now, there's a lot of reasons the stock is down. For one, I believe earnings per share were about 2 cents compared to expectations of 10 cents per share, which both would have been low regardless, but 2 cents per share is way off of the target. Additionally, Intel announced that it's going to be cutting 15% of its workforce, which I believe is about 20,000 jobs. I think the company has about 130K employees, so a 15% cut is very substantial and it's going to hit pretty hard on the company. They also did announce that they will be taking pretty aggressive cost-cutting measures, so maybe in the long term this would be good for the company, but there's always a risk associated with starting to cut costs within a company. And another big factor which I find is not covered that often is that their 13th and 14th gen chips have a lot of problems, software-related problems, and so Intel right now hasn't really addressed the issue that directly, and they haven't addressed a way they're going to fix the problem for consumers, but if they don't do so, that could be a problem as well in the future, maybe even with class action lawsuits if they don't refund some of these people's purchases. In the past 6 months alone, Intel is down almost 50%, and if we look at the year-to-date period, they're down over 55%. In terms of one-year performance, they did actually peak at $50 per share in late 2023, early 2024, but since then, the stock price has crashed pretty significantly, down 57.47%. Even looking at the 5-year graph, we can see that it's low for the 5-year time frame. They have not recovered to those previous prices before since their revenue is much lower than it used to be, and they're investing so heavily into their capital expenditures trying to build their new fab facilities. Long term, it does seem that Intel has always been a pretty cyclical company, and the company does get bailed out by the US government a lot. They get a lot of subsidies and a lot of loans from the US government as well as grants worth billions of dollars. If you guys held or still do hold Intel in your portfolio, let me know down below what your thoughts are about the company and what you think it's going to be doing going forward. Also, if you guys did notice, I am talking a little bit slower in this video than I usually tend to, and I have gotten some comments in the past asking me to do so because I tend to talk very fast. So let me know if you guys prefer this new style of video where I talk a little bit slower, or if you prefer the faster paced conversations that I do have in most of my other videos. So now I think we might as well jump into the articles talking about Warren Buffett's change to his position in Apple. And basically, as you can see by the headline, he cut his position by nearly 50%. Now, this is a pretty substantial cut, and it's in addition to his cut that he made for Q1 of 2024. So in the past year to date, he has been making a pretty substantial cut to his Apple position, which he has said he still likes the company and he still believes in it long term. But we'll take a look at what his reasoning is in a little bit. So the way these articles do know what he has done with his position in Apple is because he has to disclose as a super investor his buys and sells for the quarter at the end of each quarter, basically. So what this does not tell us is when exactly he sold his position and at what price he sold it for, but it does give us some general information about his overall holding in the company. So basically what he reported was that he has only 400 million shares of Apple now, so that'd be a reduction from 790 million shares, which is about a 50% reduction in his stake. Now, as the article does mention, Warren Buffett is well known for holding his companies long term, which is how he has been able to outperform a lot of other investors and hedge funds. What a lot of investors do is they attempt to trade within the market, and by trying to trade and time purchases and sells, it is much harder to come up with a profit that beats the S&P 500 in the long term. So as we can see right here, as early as the end of 2023 or the last quarter of 2023, Berkshire Hathaway, which is Warren Buffett's holding company, began to sell off its Apple shares. It sold about 10 million shares of Apple stock, which does represent about a 1% stake of his holding in Apple. Now, going into early 2024, he began cutting his shares even more aggressively, taking profits for about 13% of his stake in Apple. And then now, of course, in Q2 of 2024, he sold almost 50% more of his Apple stake. Now, in terms of cash that he's keeping on hand, we can see that his cash pile is now a record $277 billion for the second quarter. So one of the reasons that we can assume already right here that he is selling Apple is because he wants to have a larger cash position aside, either to make a purchase in a specific company or to prepare in order to make purchases in companies. Maybe if we do see a downturn in the market, that might make a lot of sense. We can see that compared to his Q1 2024 cash position of $189 billion, he's up about $80 billion more in cash right now than he was in that quarter. Altogether, he sold about $75.5 billion in stock in the second quarter, and of course, he's probably gonna have to pay some pretty significant taxes on this position since he's held it for so long, and his Apple stock has performed so well during that time. Now, Apple is not the only company he cut this quarter. He also cut a pretty large position of his Bank of America holding, and he has held Bank of America for a very substantial amount of time, and he has seen some pretty good gains as of late. Bank of America is one of those companies that's had a pretty hard time performing for many years now, but this year so far, they've had a pretty good track record, and their stock price has increased pretty aggressively. So we can see based on this article that about 72% of Berkshire's fair value is concentrated in 5 major companies: American Express, Apple, Bank of America, Coca-Cola, and Chevron. Now, Berkshire is still fairly diversified, but the majority of its position is consolidated into 5 major companies, and he holds a large amount of that net worth in those 5 major companies. So taking a look at Datarama, which is what I usually use to take a look at these super investors' portfolios, we can see that his percentage of portfolio for Apple is 40.81 as it was last reported, but that was at a reported price of $171. So if we take a look at CNBC instead, we can see a more updated version of this position. So what is nice about CNBC's Buffett Watch tool or Berkshire Hathaway portfolio trackers, they do include some updates as they find them. So Bank of America was updated on August 1st, 2024, and it's been reflected in this tracker, unlike the Datarama tracker. Taking a look down here, we can see the difference. So Apple is actually 44.3% of his portfolio according to this market price at $219. And of course, this actually is a lower position now because this is back when he had 790 million shares. And if we remember from the previous article we just looked at, he now has 400 million shares. So his stake will be significantly smaller than this, making up a significantly smaller percentage of his portfolio compared to what we see right here. Now, Bank of America makes up 9% of his portfolio according to this tracker, but as I will remind you, over here we can see it's a little bit off at 11.81% of his portfolio. So at least on CNBC, it does have the updated holding or portfolio weighting for Bank of America company. Now, according to the CNBC tracker, if he hadn't sold any of his Apple position, it would be worth about $170 billion right now at a market price of $219 per share. Now, I'm not going to go into any further detail on his portfolio. You can see that he has a lot of different positions, but some of them have a very small percentage of his portfolio, basically worth nothing compared to his other positions. So really the most interesting ones to take a look at are anything above, 3% of his portfolio weighting. So Kraft Heinz, maybe even Moody's and above. If you guys would like me to do a deep dive into his portfolio or at least his dividend holdings within his portfolio, let me know down below and I'll definitely make a video on that at some time. And if you want to check a similar video I made to that for Bill Gates' portfolio, check it out right here. I'll tag it up there. So before I get too deep into what I think about Warren Buffett cutting his stake so substantially in his Apple position and what I think it means for the company, we'll take a look at my own position first and my own holdings within Apple. So as you can see right here, I do own 9 shares of Apple at about a value of $2,000 for the entire position, and it makes up about 5% of my portfolio. Now these percentages you do see right here, the 10 and the 11.8% are my target and actual percentages for within this specific pie itself, not for the entire portfolio. So I want to have about a 10% of this pie right here be Apple shares, and right now it's sitting at about 11.8%, so it's a little overweighted compared to what I would want it to be. Now, if I do click the slices button, we can see it close down. This is what I mean by pie. I have a pie graph for each of these different sections. And for divine dividends, Apple does make up about 11.8% of it. Now, to take an even deeper dive into my position in Apple, we can see that I paid an average price of $136.89 per share, and the current price is sitting at $219.86. In total, I did purchase 9 shares of Apple, and with dividends reinvested, I mean there's 9.075 shares in total. So dividends here are very small, and we'll take a look at that on Seeking Alpha in a little bit. So they're not so substantial when they're being reinvested. In total, I did invest $1,232 in order to make this position originally, and my current value is at $1,995, which gives me a gain of $763 or a percent change of 62%. Apple is one of my top performing companies within my portfolio, and just to be upfront, I am not planning on cutting this position anytime soon unless something significant changes within their business model. So far, I have earned $13.47 worth of dividend income, and going forward, I am expected to be getting paid $1 per share or $9.08 per year. Apple's yield is sitting at 0.45%. My yield on cost is 0.73%. That's because the price appreciation has outpaced the dividend increases, and my allocation, like I mentioned before, is right at 5%. So next, I do want to take a quick look at Seeking Alpha to see some of Apple's metrics and financials, and then we will talk about my thoughts about Warren Buffett cutting his stake at the end of this video. If you guys are enjoying the video so far, I would appreciate it a ton if you could leave a like on it. It helps me out a lot. So year to date, Apple is up 14.2%, and they took a while kind of getting on that AI train and kind of riding that hype, but they did start announcing some of their new updates to their newer devices and how they're going to be incorporating AI into those devices, and the market has been pretty happy about that ever since. Now, do I think that AI is going to have a very substantial role in Apple's revenue? Maybe in the long run, but I don't think so in the short term, but we will have to see how it plays out for them. Now, in the past year, they are up 14.17%, so basically the same amount as their year-to-date period, and we can see they're not sitting quite at their 52-week range, but they are still pretty close to that, and they have been accelerating pretty quickly in terms of growth. Now, where Apple really shines is their 5 and 10-year graph, and that's where Warren Buffett made a lot of his money on this position. 331% return in the 5-year time frame, not including dividends reinvested, and in the 10-year time frame, 829% return. Not a lot of companies can boast this kind of growth. Now, just to show you how crazy the growth has been, in August 18th of 2014, you could have bought Apple for $25 per share. Of course, this is after accounting for any sort of stock splits. And fast forward to today, it is sitting at over $200 per share, which is basically an 8x return for the company. In terms of financials, this could point to one of the main reasons Warren Buffett has sold this holding. In recent years, the revenue has both slowed down and actually decreased, and so we'll have to see if they're able to accelerate in the future, but with such a big company, it gets more and more challenging to continue increasing their revenue consistently. Apple is a very dominant company with very strong products, but it is still very hard for such a large company to continue growing its revenue at an accelerated rate. Now, it still produces a very large amount of revenue. What it does with that revenue is it tends to reward shareholders in the form of share buybacks, which they've announced a $100 billion share buyback program, and also dividends, which they do tend to increase every year, though at a slower pace than their share buybacks. In terms of revenue per share, it has actually been increasing every year, and that is because of the share buybacks that I did mention. If you lower the amount of shares outstanding, then of course the revenue per share is going to increase by default, and the same can be seen for earnings per share. Now, this graph right here does a very good job showing Apple's shares outstanding and how they have decreased over time. So in 2019, they were sitting at over 18 billion shares outstanding, and fast forward to today, they have been able to reduce it to 15 billion shares outstanding, which is fantastic for shareholders, and I hope they continue doing this going forward. Their dividend per share has also increased nicely from 75 cents in 2019 all the way to 97 cents in 2023, and of course, it's going to be $1 per share this year in 2024. Now, what I do hope to see in the future is them accelerating this dividend growth. They do have the cash to do so, but they choose to put it in share buybacks instead. And depending on what your investment style is, you might prefer it in share buybacks or in dividends. The argument can always be made that for share buybacks, you're not having that tax implication the same way you would with dividends. But of course, me as a dividend investor or as a dividend loving investor, I would prefer having some more dividend growth in this company. Their pay ratio is extremely low, so I have no concern at all about them being able to continue paying up their dividend in the future. And of course, the dividend percentage itself is already very low right now as is. And just real quick, Apple is a free cash flow machine. In 2019, they were producing $3.19 per free cash flow per share, and in 2023, they produced $6.33 of free cash flow per share, which is a very substantial growth compared to their 2019 performance. Now, this free cash flow per share is what enables them to continue growing their dividend and also producing share buybacks for the shareholders. Now, taking a look at their dividend scorecard, we can see that they have 10 years of dividend growth history, which makes them a dividend champion, and their 5-year growth rate is 5.56%. But as I've said, in recent years, it has been a little bit lower than that, closer to 4% of dividend growth per year. If you are looking for a higher dividend yield, this might not be the company for you, especially with the recent dividend growth rate. But if you are looking for total return in general, Apple is a pretty strong contender regardless. What is a little bit more impressive than their dividend yield is their dividend yield on cost, which is basically the current dividend compared to your initial purchase price for the company. So if you would have bought it 10 years ago, you can see that your yield on cost would effectively be sitting at 4.22% or a little bit over 4% in general. And that's because of price appreciation and dividend increases. Now, if we take a look at their valuation metrics, we can see that this may be a big reason as to why Warren Buffett decided to trim some of his position. Right now, it's trading pretty rich at a price to earnings ratio of 33.46 or a forward-looking price to earnings ratio of 32.81. Now that is pretty substantially above their 5-year average, which sits at 28.33 and 26.98 respectively. And there have been better opportunities to buy this company in the past where it was sitting much closer to 20 price to earnings ratio. So this could just be a little bit out of his comfort zone for such a large position in his portfolio. Now, as I was talking about before, their revenue growth has slowed down in recent years, which, like I said, could be another big reason as to why Warren Buffett might want to trim some of his position in this company. Year over year, it's only been increasing by 0.43%, and looking forward, it's only expected to increase by about 2% per year. And compared to their 5-year average, that's substantially lower than what Apple used to perform at. Now, in terms of profitability, their gross margin is sitting at about 46%, which is pretty solid. But if we compare that to software companies or more software-related companies like Microsoft or Visa, this is significantly lower than theirs. That's because Apple also sells and produces their own hardware. If we take a look at Apple's performance graphed against the S&P 500, we can see that surprisingly in the past year, it is actually underperforming. It's only up 14% compared to the S&P 500 being up over 18%. But in the 3-year time frame, Apple significantly outperforms the broader market, up over double what the broader market has been putting out. The same can be seen in the past 5 years. You can see how quickly Apple has increased this gain on them, up 331% in the past 5 years, compared to the S&P 500, who is only up 82.35%, and Apple's performance is really outstanding. Now, personally, I don't think that there's much reason to be alarmed of Warren Buffett cutting some of his stake in Apple. He does have a very large position in the company, and if he hadn't sold any of his stake, he would be over 50% weighting of his portfolio in just Apple alone. Now, Warren Buffett does not mind holding his winners, and he does not mind holding larger positions in certain companies, but even for him, I believe 50% is going to be substantially over his risk tolerance. Also, at this point, he has gotten so much out of his Apple holding that it only makes sense to sell some of his position and to take those gains. If he holds any longer, he risks lowering the return on his company, or at least the yearly rate of return of this holding. Now, clearly, he does still have some faith in the company. 25% of his portfolio is still going to be composed of Apple stock alone, which is a pretty sizable position regardless. And I don't know about you, but me personally, I only hold about 5% worth of Apple, and anything over 10% starts getting pretty large of a position for me. Apple's revenue in the past couple years has been decreasing and stagnating, so we'll have to see if they can kick it back up, but that could be another reason for concern for Warren Buffett. It might not be the cash producing machine that it once was. Of course, the revenue is still large, but if it can't continue increasing its revenue, it might limit its total stock price appreciation over the long run. Now, another big reason that he may have cut his position is that there is increasingly more and more chance of a recession coming ahead of us. And so if he is stockpiling cash, it could be to make purchases in case of a recession, and it makes him a little bit more prepared for the chance of a recession, whether or not it does happen. Now, me personally, I hold about a $6,500 position in cash alone right now, which is a very large position, and I'd much prefer to have that in stocks, but I do want to hold that money on the side, awaiting any sort of dip in market price for any of the holdings I have been looking at for quite some time. That way, if we do see any substantial dips in stock price, I'll be able to jump right in. And if not, I'll start dollar cost averaging that money back into the market over the next couple months. With the news of Warren Buffett cutting his position in Apple stock, I do think it's going to affect its stock price negatively by just a little bit, but I don't think it's going to affect it too aggressively. And if so, it's going to be some other external factors at play aside from him just selling his position. As always, I do really appreciate you guys taking the time and watching this video. I do really hope that you guys at least found some of the video useful for yourself. Let me know down below whether you hold Apple stock or have any plans to buy it in the future. And if you do hold the stock, let me know what your plans are going forward, if it's going to affect your decision on whether you're holding it or selling it, or if you're just going to continue coasting regardless. If you want to support the channel and you haven't yet subscribed, please do so. It helps me out a ton. If you want to see my last video where I talked about the earnings calls for both Microsoft, Starbucks, PayPal, and AMD, check it out right here. If you do want to see my previous video where I talk my dividend income for the month of July, check it out right here. Other than that, I want to thank you guys for watching, and I will see you in the next one.